Let's shift focus then back to our market fundamentals. And joining us today on Street View is Yogesh Mehta from Motilal Oswal Securities. Yogesh, hi, afternoon. Firstly, a word on the IT pack. Infi done. What's the expectation now from TCS and, of course, the mid-cap IT pack, which has been running up today?
Yeah, afternoon. Post this set of numbers by Infos, which are very good and unexpected, and deliver better set of numbers. And similarly, the hedging on the currency side is not so vulnerable for all these companies. So we feel that HCL Tech and TCS both should deliver a better set of number, wherein HCL Tech is a topic for us on the sector on the mid cap side, and the second would be Tech Mahindra, which has got lesser exposure towards European markets. So these are the two stocks which we are looking at on a similar to play on result on a similar set of expectations.
Yogesh, what do you make of the pharma sector then? Especially stock like Dr. Reddy's and Sun Pharma. Dr. Reddy's, for instance, has hit a fresh lifetime high in trade. Do you think they continue to be the one safe bet for investors in the medium term?
Yeah, to certain extent, yes, because there are none other sector which are available that the visibility is there that for next 2-3 years or 5 years the sector is going to perform better, and if you buy from this level. But pharma is such thing that the consistency is visible, and even though it is quoting at a lifetime high, these are the stocks, namely Dr. Reddy's and Pharma and Lupin and all. But still would be a preferred bet because still earning growths are there, on the momentum is still intact. So we still believe that yes, Dr. Reddy could be a major beneficiary from here on investors' point of view, as well as Lupin.
Yogesh, what's the view on the overall economic situation? While inflation has come in lower than expectation, you've still got IIP as well as CPI which have disappointed. How does it build up to the upcoming monetary policy? And does it seem that in the light of the weakening rupee, the RBI would have elbow room to cut rates?
Looking at currency, Indian rupee currency is weakening day by day, and now it is at around 60 rupees right now. And that differs the fact that CRR could be there, but we are not expecting anything on the real rate cut side, anything, because it increases worries for inflation as well, because crude is not correcting at all, which is a major the worrisome thing for us on economy. So overall, what we are looking at on IIP number, which is a decimal set of number, minus 1.6% degrowth. But what we think that everything is discounted right now, because we see all other sectors also not performing, manufacturing and other stuffs also. So overall, it seems that will remain here only. The outlook is still bleak for next 1 or 2 quarters more, but then we can see some uptick from base effect.
Given that, then what would be your outlook on rate sensitives, especially auto and banking stocks? Auto in particular, which is seeing which is bearing the brunt of a slowdown. We've seen very little signs of a pickup in demand as well. How would you advise investors to play auto stocks in the medium term?
For auto stock, rightly you said, the demand is a little bit of lacking here, and it is sluggish. And the best play would be then Tata Motors would be here, because it has got a lesser exposure compared to very small exposure in India. But looking at China GDP number, which are out here, which are in a better way, and 20% of the sales of JLR is being from there, then we think that consistent delivery of volume will be there on a monthly basis for Tata Motors. And still there is a upside room is left with the new launch. So Tata Motor, and secondly on the Mahindra and Mahindra, with good monsoon, one can play on this tractor plus utility vehicles which are launching day by day with the new versions. So these are the two stocks which can be looked at for buying for investor point of view.
So Yogesh, leave us with one stock idea that your house is bullish on right now.
Yeah, certainly, yes. We are very much bullish on HCL Tech, that is on the IT sector. That looks very promising from here.
HCL Tech is a stock that you're watching out for, that you're recommending. That stock holding up sharply in trade, seeing a gain of a good 2%. Thanks for that, Yogesh. Good chatting with you on Markets at Lunch. We'll step into a short break here on that note, but when we come back,